Hey, what's up, everybody? Ralph here. So, if you haven't been paying attention right now, there's a Hollywood actor strike that's going on. It's been going on for about a month now, a little over a month now. I think started in like May, and it's starting to like have major impact on on the entertainment industry. Like some of the biggest studios are starting to be impacted, and they're being forced to like shut down. And it's only a matter of time before like more studios follow suit. So, like, what's the reason for this? Like, what's going on? Obviously, it comes down to money, right? You have what they have. It's called the Alliance Motion Picture and Television Producers, which is the AMPTP, which is like the studios. They're going against obviously the union that supports. I think it was the SAG AFTRA. They basically support like writers and actors. So those two are going together. You know, obviously trying to come to an agreement on compensation, right? Because it always comes down to the money. So basically, what's going on is obviously when it comes to how actors get paid, and I don't know the weeds and everything, but I'll just give you like the basics. Obviously, when they do a movie, they get compensated for that, right? But not only do they get compensated for doing the movie, but they also get residuals for every time movies are run on on networks and stuff like that. So a lot of these actors like rely on the residuals, especially the lower level actors and actresses, because obviously they're not making as much as the big time actors. So they rely on these residuals. So, but what's happened is because of streaming, you have the studios saying, all right, we need to change the way compensation is given, because obviously it's affecting their bottom line, right? Well, with streaming platforms coming around, people are consuming content differently. And I guess the studios want to change up the compensation. So instead of giving residuals, I think from what I've read, they want to go to like flat fees. And obviously for actors, they're like, nah, this is changing the way we make money, and it's cutting into how much money they make, right? And like I said, a lot of these actors and actresses rely on these residuals. And not only that, but you have AI, right? That's impacting the way writers are being compensated, right? Like you have a lot of these studios, I think, using AI to create scripts, and that's taking away the jobs of some of these writers. So basically, technology, AI, all that stuff like streaming is impacting how much money actors are getting, and right now they're trying to come to an agreement on how they can come with compensation. So obviously it's impacting like production, obviously movies, and this is having a big impact on studios and how much money they make. But not only is this bad news for studios, but this is also bad for investors, right? Because obviously you have the actors and you have studios, but if you're someone that's investing in stocks and stuff like that, this is also going to affect your returns on your investment. So this is something obviously we all should be looking at, especially if you own some of these stocks that I'm going to mention. So like obviously some are going to be hit more than others. Some rely on the entertainment industry more than others, but there are some that are going to be impacted. So let's go over like which stocks are going to be are more vulnerable to Hollywood, more vulnerable to this Hollywood strike. And it's not in any particular order. I'm just going to run down some of these companies, and then we'll go over like some of the stocks that and see how it impacts you. So like here are a few top names. Like you got Walt Disney, you got Disney, right? You got Warner Brothers, Warner Brothers. You got 20th Century Fox, Sony Pictures. You got Netflix, Apple, Amazon, and NBC Universal, which is now owned by Comcast. So let's talk about Disney, right? Like obviously Disney is like one of the biggest studios in Hollywood, and it's also it's one of the most exposed to the strike, and they've been going through a lot lately, right? If you look at their stock was at one point like a couple years ago was at a really high point. Now it's been creating down for a lot of reasons. The quality of their movies aren't as good as anymore. You have all different politics and stuff like that. But they've been struggling a lot when it comes to that. You can see from the layoffs, right? You got they own ESPN, they own was it ABC or NBC, and they're doing a lot of layoffs when it comes to this stuff. So you can see that they're losing so much money, billions of dollars when it comes to their value of their stock. So they're impacted by this, obviously big time, and Bob Iger, he's trying to figure out how to trying to monetize this and trying to get them back into how to improve their bottom line. So Disney obviously is a big one that's being impacted, especially when a lot of their content is relying on the actors and actresses. And the same thing with Warner Brothers. They obviously they need the actors. They rely heavily on the actors to get their production going. So then you got other places like Netflix, I mean, their content is just all movies and shows, so they know this is going to impact them big time. And then of course you got Apple and Amazon, which don't rely so much on actors. Like the majority of their money doesn't come from like shows that they produce on their soft on their network. Apple, you got the Apple TV, you got Amazon Prime, but they don't rely on that, right? Amazon, their bread is buttered through Amazon Web Service, and then Apple obviously through the phones. And then you got Comcast, which also relies on that as well. So obviously when you look at Netflix, Apple, they're not going to be impacted as well because they make their money elsewhere. But all these other ones like Disney, it's gonna affect them pretty good. So let's go into like the stock of like Disney, right? So we're gonna take a look at their stock, and let's go over what 5-year period. And you can see, like, if you look at their stock, boom, at was it March 8th of 2021, they were at $201, over $21 per share. Now they're at $88, right? And it's for a variety of different reasons, right? You know, there's so many reasons for why that's happened. So this strike is obviously going to impact them, and it depends on like how long it's going to last. Like right now, it hasn't like affected like things like Netflix, Apple, or anything like that, because you know they still have movies and stuff like that in production. But what if this strike lasts longer than 6 months? What if it's a year? Right, then obviously you're gonna see investors start saying, all right, you know, this is lasting longer than I expected. Maybe we gotta rethink this, and you'll probably see the stocks drop for, you know, the price drop on a lot of these stocks, because right now I think from based on articles that I read, I think a lot of these studios, they're waiting for obviously, you know, 6 months where these actors' money run dry, right? They only have so much money in the savings, and then they still have bills to pay. Right, these studios, they're billionaires, so they have money. They can last longer than these actors, and I think that's what they're banking on, or that's what they're hoping. So they're probably expecting them to come back to the table eventually, because you know their pockets are eventually gonna get empty, and they're gonna have to say, you know what, we need to accept what we got and start making money because we got bills to pay. Right, so it's gonna be a interesting battle to see. It's interesting to see like who bends first, right? Who bends the knee first? And I think based on the articles I read, I think these studios are expecting these actors to bend the knee first. So let's go into see another stock. All right, so you got Warner Brothers, right? We got WBD, right? They had $12.40. Let's see what their 5-year. So I mean, they're not huge. Like their stock is not really affected as much. Let's check out Netflix. Netflix, and they're not gonna be impacted, like I said, yet, right? Because obviously, like they still have movies and shows, that's being produced, so they're not being affected yet. But let's see what happens 6 months to a year if their strike continues. Then you'll probably see people like, all right, you know what, this is there's no more content being produced, and we have to start figuring out if this is a good stock to hold long term. But like I said, I think a lot of people are expecting them to come to an agreement within 6 months, but you never know. So this is something. If you're someone that holds stock in Netflix or Disney or whatever, Apple, I mean, obviously these are things that you want to keep an eye out. But I think Apple and Amazon, those guys are gonna be fine, because like I said, their money is in other services. So. But if you're someone that owns these stock, man, like, and especially like when it comes to these actors and actresses, like it's tough, obviously, what they're going through. But you got to adapt to the change, right? Technology is always changing, and you got to be someone that, when it comes to change, you got to be able to adapt to these change, right? I know a lot of people complaining about AI being able to take people's jobs, and it sucks, but it's coming regardless of whether you like it or not. You got to be able to adapt, and you got to be able to say, all right, what can I do to figure out how can I adapt to this change and make sure that I'm good long term, whether it's like making sure, like I said, relying on one source of income is dangerous, right? A lot of people rely on one source of income, whether you're an actor, you're a writer. You got to create multiple sources of income, right? Whether it's investing in stocks, investing in real estate, starting a business, you got to be able to make sure you have multiple streams of income. So therefore, if there's a change that comes into society, you can learn how to figure that out and adapt to it and pivot somewhere else, and your income is not destroyed off of one certain change. So a lot of these actors and actresses are gonna be fighting over this, but I don't think they're gonna be able to stop it, right? Unless there's like government intervention or they're gonna do something with AI. But as you can see, like all these companies are starting to adapt and starting to implement AI into their business. And it's gonna be a lot of change for a lot of people, and it's gonna be a lot of people whose jobs may be on on the line, or that could, that's at risk of being taken away. But you got to figure out, you got to adapt to this. You got to figure out how to adjust to this, because it's coming anyways. Like, whether you like it or not, it's coming. So this is something to just keep an eye on, and especially if you own stocks in these, this is something like over the next few months to see where this goes, to see if these writers, like I said, they've been striking since May, so that's only about a month and a half. See how far they're willing to go, because obviously eventually, like, they're not making any money, there's no movies being built, produced. Eventually you're gonna run out of money, you're gonna have to say, all right, what are we gonna do next? So so just keep an eye on it, and we'll see where it goes. So that's all I got for you guys today. If you got any comments or questions, make sure to leave it down below, hit the like button and share, and if you haven't done so already, make sure to subscribe. Right, so you guys take care and have a good one. Later.